Welcome back to Fast Money. All week long, we are talking to the companies leading the new era of AI on this year's CNBC Disruptor 50 list. Number 6 on the list is Ramp, a financial operations platform trying to help companies automate the spending process. CEO Eric Glyman is here on the set. Eric, thanks for being here with us here in person. Congratulations on your ranking on the CNBC Disruptor list.
Thanks so much for having me.
Can you walk us through, because you've made the list before, what would you say is the biggest change forward your company has made between the first time you landed on the list, I think in 2024, and then now?
That's right. I think this is our third year on the list. We feel incredibly lucky to be on. And maybe for folks who don't know too much about Ramp, the way you can think about what we do is we're a finance operations platform. From a single place, you can issue cards, make payments of all kinds, automate expense reports, and even automate accounting. The way to think about what we do is we help companies reduce the amount they spend. We support about 40,000 businesses, from early stage companies to restaurants to Fortune 500s, on average reduce their expenses by about 5% per year. I think the big change, and I think a big part of why we're there, is first, the depth to which AI is deeply used in the platform. AI may not be smart enough or even close enough to be a CFO, but it certainly can do your expense report. It certainly can help you do your accounting much faster and more accurately, and also just the speed that the company has grown. We are in the upper 9 figures of revenue. We are growing even faster this year at a larger scale than we did last year. And so those are some of the changes and things that people are looking out at.
And so when a company employs your technology, are they doing it alongside the humans that previously did those tasks that were very tedious, or is it in place of?
It's alongside. And so for most people, it's actually a very simple experience. You're probably used to, if you take a taxi cab for work, maybe you have a corporate expense card or your personal, and you use some software to go and submit your reimbursement. For many people, it's the worst hour of their month. It's very tedious. It feels very low value. And with Ramp, it's all integrated. So you tap your card. It then checks in real time before the expense is approved. Does this enter out a policy? Then an AI based on past experiences will write the memo for you. It can text you for the receipt, and that whole experience takes less than 15 seconds. And so often it's really automating these very simple low-value tasks. And so it's expense reports, it's doing bill payment runs, it's month-end close or procurement cycles. So it sort of feels quietly integrated into experiences you already know.
I'm sure for a while the growth was organic, but you guys made a decision to sort of get that in front of people. The Super Bowl ad, and since then, we can find you all over the place. I mean, that was a conscious decision. Do you think that's paying dividends now?
It is. I mean, we feel incredibly lucky, first, to be growing faster, but also serving so many more companies. I think a year ago, we served approximately 20-something thousand companies. Now it's over 40,000. But big picture, we serve about 1.5% of the corporate and small business card market. For us, that means that 98% plus of businesses still are doing things the old way and still can benefit. And so we're excited, but we're going up against juggernauts, companies that have existed since the 1800s, and I think haven't evolved their products too much since then either.
What then is the competitive advantage that you offer over some players, whether they're pre-existing or other startups that are trying to do similar to what you're doing as well?
Yeah, it's really two things. First, it's really about measurable impact. I don't know why. I think we're the only company still in our market that actually measures how much money we have actually saved our customers and how much time we have actually saved them.
How much is it?
It is over $2 billion since launching just shy of 5 years ago. As well as over 20 million hours of labor. Lifetimes of just doing expense reports, if you can imagine,
oh my gosh,
is no longer being done. And so that's one. And I think it's in contrast to many of our companies are working really hard to get you to spend more money, earn more points and multipliers. We think most business owners want to spend less. And I think the second is speed. We last year launched 3 major new product lines, as well as 207 features. Over the last 5 months, our engineers have shipped 275 features. And I think when you contrast this to, I'll put it this way. If I had to use the same computer my parents used when they first went to work, I would really struggle to do it. But I think I could, swipe the same kind of credit card that they had to use or same bank account. And I think that many financial products have been stuck in time. Your car doesn't do so much more than it did for you in the 80s.
Sure.
And so I think that evolution of it's not just cards, but cards that do your expenses, books that keep themselves, money that will move to higher yield, I just think is much more fit for the times.